Hey, good morning, everyone. Hope you're all doing well. It is Tuesday, March 25th. We're getting into the end of March here, and we're starting to see the continuation, I guess, of this bull side press. But what is the potential of that? That's to be determined yet. But so far, we're gaining ground, right? We're seeing that prices have continued over the last few days. Even on this overnight, we got a little pullback and we continued higher. So let's go through some of this news before we take a look at the breakdown in terms of what's going on with these equity markets. Um, Let me just see where this thing is. What was the, oh yeah, Hood. So, main point of news, I guess, this morning that I see is Massachusetts is going after Robinhood over its decision to expand its trading offerings to prediction markets. So the brokerage recently teamed up with Kalshi to offer event contracts after testing the waters in the 2024 presidential election and a similar push for the Super Bowl that we saw. While the new prediction hub on Robinhood is focused on things like the NCAA March Madness tournament, there are plans to eventually expand into economic events such as corporate earnings, Fed rates, right, which are offered by the Kalshi website. Now, in a quote, right, this is just another gimmick from a company that it's very good at gimmicks to lure investors away from sound investing. This is what Massachusetts Secretary of State Bill Galvin said, adding that Robinhood was linking a gambling event on a popular sports event that especially popular to young people to a brokerage account. So the state securities regulator has sent over a subpoena for details on how many of Robinhood's users in Massachusetts have requested to trade college sports events. And don't forget that it also went after Robinhood in 2020, accusing the platform of encouraging risky trades among inexperienced investors via gamification strategies, and later secured a $7.5 million settlement for the claims, as well as a data security breach in 2021. This time around, the accusations are centering around gambling, and though it may be harder to prove, especially for financial derivatives that are listed on a CFTC regulated or registered exchange. So Robinhood is making the case that prediction markets are the future for traders, right? Gambling. And has called them as an innovative asset class. Instead of betting against the house, this is an exchange where buyers and sellers are meeting, according to CEO Vlad Tenev, Bulgarian. So similar to the futures contracts that are used for commodities or hedging portfolios. Now, other point to differences in price discovery and the liquidity offered by traditional derivatives, and argued that the predictions market aren't generally based on solid research or hedging models, but might be the latest iteration of gambling services masked with financial names. Remember, right, binary options, very similar kind of breakdown from that. Now, in terms of news today, this morning we had Fed's Kugler's speech. We do have Fed's Williams that should be coming on now. We have consumer confidence at 10. We have new home sales at 10. Richmond Fed manufacturing at 10. So a busy kind of morning at 10 a.m. where we might want to wait for some of that news to kind of populate. And we also had tariffs, right? Trump announces 25% tariffs on countries that buy Venezuelan oil and gas. As of April 2nd, a day Trump has dubbed Liberation Day for the economy. Countries that buy oil from Venezuela will have to pay an additional 25% tariff on trade with the United States. And the president said, broke this down on Truth Media. Exactly what other tariffs might go into effect that day remained fairly unclear, but news outlets reported that the president would not impose blanket tariffs, but would focus on more industry-specific ones, and even through reciprocal tariffs are still on the menu. There might be an exemption for some countries, but officials caution that the situation would still change. The president also said additional tariffs on cars and pharmaceuticals will be coming soon. So the Trump administration also asks SCOTUS to leave federal worker firings in place. The Justice Department is asking the Supreme Court to block a federal judge's orders requiring agencies to rehire about 16,000 staffers and probation roles who were fired in recent mass layoffs aimed at slimming down the government. The former federal workers had been employed at the Departments of Veteran Affairs, Agriculture, Defense, Energy, and Interior, and the Treasury. So a San Francisco judge ruled in a lawsuit brought by the labor union that the government didn't follow correct legal procedures when letting them go, and a judge in Maryland is also issuing a similar ruling. So this does continue as these markets are trying to find a bid. This tariff news is expected to continuously populate throughout the week as we head towards the beginning of April, realistically. And right now, what we're seeing is the markets are enjoying some of this upside. Where is this just kind of a rally into a lower high? Realistically, that's to be determined just yet, but right now, if we're just basing things on how distributions and auctions move, the analysis is still pointed towards the upside to see if we can see some of these expansions. Now, one of the things that is worth mentioning is that I don't necessarily love when markets either rally super aggressively or drop super aggressively. They become fragile at that point. Yesterday we had a P-shaped profile here on the S&P 500. That is holding out right now, but one of the best case scenarios, especially on these sterner rallies, is to create momentum and allow for balance to form. So meaning some kind of range momentum around those balances before we do continue higher, rather than us just leapfrogging through balance and balance and balance. And because that would allow for, I guess, very thin volume on the upside swing to kind of get accumulated rather than us looking at it from a perspective of real buying that kind of holds balance and then continues higher. So what I'm looking at realistically is the continuation of the upside, but we have to understand that I would want to see the S&P 500 aggressively start moving above 58.35 today, so we can buy dips into that, because right above at 58, like 60, 65 is the next distribution that we have to be cautious of. So the bull side momentum still remains above 5,800. We have a minor point at around 58.20, maybe 58.18 that we could still sustain and hold the bid from. But right now there is a lot of volume accumulated into this high after a nice sweep higher with a pretty strong absorption that was created from yesterday and even on the overnight, especially on NASDAQ. So it does seem like the buyers are still strong. They're motivated and they want to go. So I would lean towards buying dips into today's market as well, just like yesterday, unless we see a breakdown of the 5,800 on the S&P, which would really cause things to start turning down, right? That's going to be my main pivot for today. Otherwise, I am positioned to start looking at this from the perspective of the buy side. I wouldn't be surprised to see a little failure off the open into the morning session where we do pull down a slight bit, but nothing too crazy before we start looking for the accumulation of that long side. So that's how I'm going to base today's plan, and we'll see what we get. We're going to open up our live trading room on stream at TradePro Academy. So if you guys are interested, remember, check out TradeProAcademy.com. Otherwise, you can find us in our free Discord at community.TradeProAcademy.com. So have a great trading day, everyone. Upside is still the right side for now. Let's see how this accumulation does continue, and I'll see you guys in tomorrow's morning up.